Bitcoin has surged toward the unprecedented $200,000 mark in 2025, marking one of the most significant milestones in the history of cryptocurrency. This explosive growth isn't just fueled by hype or speculation. It is the result of real-world adoption, massive institutional interest, and game-changing regulatory advancements. In this video, we take a deep dive into what's driving this historic rally, focusing on two key forces: institutional adoption and the approval of multiple Bitcoin ETFs, exchange-traded funds. If you're looking to understand why Bitcoin is booming right now and what it means for the future, this is the video you need to watch. After years of volatility and skepticism, Bitcoin has firmly established itself as a legitimate asset class. What began as a decentralized alternative to fiat currency has now matured into a global store of value, embraced by financial institutions, hedge funds, sovereign wealth funds, and even governments. The approval of Bitcoin spot ETFs in late 2024 by the U.S. Securities and Exchange Commission, SEC, was a watershed moment. For the first time, investors could gain direct exposure to Bitcoin through traditional financial products without needing to manage wallets or deal with exchanges. This dramatically lowered the barrier to entry, unlocking trillions of dollars in capital that had previously been sitting on the sidelines. One of the most notable ETFs, BlackRock's iShares Bitcoin Trust, IBIT, has been a resounding success. Within just 11 months of its launch, it became one of the most heavily traded ETFs in the world, with over $50 billion in assets under management. This signaled to the broader financial world that Bitcoin was no longer a fringe asset. It had gone mainstream. Other asset managers like Fidelity, Vanguard, and Invesco quickly followed suit, launching their own Bitcoin-backed funds, further increasing institutional exposure and demand. With billions of dollars flowing into Bitcoin every month through these vehicles, the market's liquidity and stability improved significantly. At the same time, institutional adoption has gone far beyond ETFs. Major corporations are now adding Bitcoin to their balance sheets as part of their long-term treasury strategies. MicroStrategy, already known for its aggressive Bitcoin accumulation, now holds over 580,000 BTC, while new players such as Tesla, Apple, and even non-tech companies in sectors like energy and retail have announced similar moves. Many of these companies are using innovative strategies, such as issuing debt or selling shares, to raise capital specifically for Bitcoin acquisition, showing a level of long-term conviction that hasn't been seen in previous market cycles. Governments are also joining the party. In March 2025, the United States announced the creation of a strategic Bitcoin reserve, similar to its strategic petroleum reserve, to ensure the country has exposure to decentralized assets amid global economic uncertainty. This move, which shocked the financial world, sent a clear message: Bitcoin is now seen as a strategic asset by the highest levels of government. Countries like Switzerland, the UAE, and Singapore have already adopted similar strategies, and discussions are underway in parts of Latin America and Southeast Asia. The macroeconomic backdrop also plays a critical role in Bitcoin's surge. With persistent inflation, ongoing geopolitical tensions, and declining trust in traditional currencies, investors are seeking alternatives that offer long-term protection and independence from central banks. Bitcoin, with its fixed supply cap of 21 million coins, offers a unique hedge against fiat debasement. The narrative of digital gold is stronger than ever, but now it's backed by real institutional money and policy shifts, not just ideology. Another factor contributing to Bitcoin's price climb is the increasing scarcity of available coins. With long-term holders, institutions, and governments buying and holding Bitcoin, the amount available on exchanges has dropped significantly. On-chain data shows record low exchange reserves and increased wallet accumulation, signaling strong holding behavior and low sell pressure. This supply crunch, coupled with ever-increasing demand, is pushing prices to new heights. The most recent Bitcoin halving in April 2024 has also played its historical role in tightening supply. Each halving reduces the reward miners receive for validating transactions, effectively slowing the rate at which new Bitcoins enter circulation. Historically, Bitcoin experiences major price rallies in the 12 to 18 months following a halving, and 2025 is proving to be no exception. Combined with institutional buying, this halving effect is magnified, adding more fuel to the fire. But with great opportunity comes risk. While Bitcoin's surge to $200,000 is exciting, investors should remain cautious. Regulatory shifts, market corrections, and technological vulnerabilities can still impact the market. In this video, we also explore some potential risks and scenarios to watch, including SEC policy changes, tax implications for ETF holders, and how global macroeconomic events, such as war, recession, or a dollar collapse, might affect crypto markets. Ultimately, Bitcoin AS path to $200,000 represents more than just a price milestone. It is a clear signal that the global financial system is evolving. As decentralized finance, DeFi, Web3, and blockchain technologies continue to mature, Bitcoin stands as the cornerstone of this transformation. Whether you're an investor, a trader, or just curious about the future of money, understanding what's driving this rally is essential.